Future Planet Capital. Introduction. Future Planet was founded over 3 years ago to provide growth capital to entrepreneurs seeking to profitably solve the world's greatest challenges. Through a unique series of partnerships and relationships, we invest globally in the entrepreneurs and science emerging from top universities. Until now, venture capital has been accessible mostly to insiders, institutions and some HNWIs, yet it is private markets and alumni from top universities that have created most of the value in the technology revolution. Now we are democratizing this stage of investment, allowing our investors to take a stake in our company and access the growth generated by top companies and VCs from universities in Silicon Valley, the Eastern Seaboard, Europe, Israel and Asia. By investing with a professional venture investment advisor, you are exposed to a private asset class that has generated 30% IRR over 25 years for institutional investors. Convertible key terms. The key terms that apply to the Future Planet Capital Advanced Subscription Agreement are set out in the Key Terms document attached to this campaign in the document section, and the summary is set out below. Conversion of the Advanced Subscription Agreement will take place on a qualifying equity fundraise of £1 million or more at the lower of a 30% discount to the share price paid by investors in the qualifying equity fundraise, or the price per share set by a £15 million valuation cap, and is not subject to the discount. If no qualifying equity fundraise has occurred on the long stop date, which will be 18 months from the date of the agreement, or a winding up event, conversion will happen on the long stop date or the winding up event at a share price of £15.63, or if lower, the price per share issued after the date of the deferred subscription agreement. If a change of control or IPO occurs prior to the above events, conversion will automatically trigger at a price per share which is the lower of the lowest price per share issued or sold as a part of an IPO or change of control, discounted by 30%, or the price per share set by a £15 million valuation cap, and is not subject to the discount. Intended impact. Our UN Sustainable Development Goal-led investment thesis was built to identify founders and companies whose ideas will not only impact millions, but provide a market return to shareholders. Innovations from our university network have revolutionized society, the internet, penicillin and solar power, to name a few. They've also led to the founding of some of the largest companies to have ever existed: Apple, Facebook and Google. We are matching the two, combining for-profit capital with the innovation and resources of entrepreneurs at top universities. Imagine if every life-saving university innovation had the backing of Tesla. We are supporting an alternate route for exceptional socially minded founders, impact and innovation, enabling the best and brightest minds to scale solutions to challenges in a way that philanthropy and charity never has. Monetization strategy. 3 revenue streams combine to provide a strong, diversified business. Venture funds. Through acquisition and organic growth, our 5-year target is to manage $500 million of venture assets. From this, we aim to take a fixed management fee of 2% on concreted long-term revenues. We also charge a 20% performance fee on these funds, of which 30% is returned by the company. Co-investment platform. Large investors want access to our deal flow and the ability to invest alongside us. Our platform provides a steady flow of capital raising opportunities which are more appropriate for co-investments versus own fund. For this, we charge management and performance fees. Introducer and sub-advisory business. We have signed partnerships to introduce deals to some of the largest private banks and corporations. We take introductory management and performance fees for specific mandates and deals that we have originated. Use of proceeds. We intend to acquire management companies that provide further fee-paying assets. We believe that these acquisitions will generate profitable business from day one and a platform from which to grow. The aim is to use the momentum and revenue generated from this to launch the second Future Planet Fund in 2021 and continue our growth with a target of $500 million in AUM by 2025.